What's happening, everybody? Happy Wednesday. Welcome back. Daily profit plan. Survived the day yesterday. Markets ended up closing at 69.44. And we played the daily profit play level. I think the 69.40, 69.50 was our 10 wide on the call side. We had that pretty quick profit once we had the fill here. To go back to neutral, we had a little bit of time around the 11 o'clock handle to see that our $1.50 was filled, and we had a quick like run down to like 50 cents or less. So even by like 11:30 in the morning, things are still pretty neutral. Did anybody do better than that, by the way? If you pulled in the 150 with me or pulled in the dollar on the five wide, hopefully you were taking some profit around that 11 to 11:30 handle. By the time we wrapped the session yesterday, right around 11 o'clock, we were already out. The day was about 120 bucks for me because I ended up getting that sacrifice to the upside, which, by the way, did offer some profit. So again, it doesn't matter. Like, this is just hindsight discussion, but the fact is the market did not finish within the plus 24 that we expected on the day. Once we hit live trading for the day, it was going to be like a plus or minus 16. I talked about it with Lance because like one of his services, he looked at like the 10 o'clock implied move of 16 points, and it ended up going way higher than that. So anyway, we had a pre-market at 24, opened up around 6908, finished at 44. So there's a what 32 point move. No, 30, I guess 36 point move. 36 point move when it was a plus minus 24. And the fact is we survived the day. So that's a good thing because we still were able to collect some premium, make a nice daily gain, and not have to sit on the trade all day. That defense trade that I talked about, it was the 69.50. If I share my screen right now, I am right. Yeah. 69.55 by 45 by 65. That little trap up here. I saw this trading for as low as $8, and I think it was like $8.20. So I took the trade for 9.50, and it was trading down to about 8.20. Once we got into the late stages of the day, like I'm talking the final like 20, 30 minutes of trading, we kept poking like here's 48.65, here's 48 and change. That high is 48.49, that high is 48.69. So I mean, we nearly got up to 49, which would have given my trade, I mean, my exact break even because it was a credit. It would have been 45, so 69, 45 with the credit would have given me from 55, so 69.55 minus 950. So 69.45.5 was my break even as far as that trade like sits at the end of the day. And because we were up into like the 48s, you'd have had somewhere between, $200, $250 of potential profit there those final few minutes. Didn't matter. I took the trade off for a minus 30 cents and ended up taking the net profit on the day. But all in all, it's like we mapped out the day pretty well. Despite the market not finishing inside the market maker move, we did our job and still survived the day with a nice winner. So overall, pretty happy with that. All right. Just catching up some comments here. Larry had 35 by 75, 10 wide, got out for a buck 10. That's good. But then did a 69.85 bull put for 70. Oh, there you go, man. Yeah, great. All right. So you got a little love on the daily prof play as well as went bullish on the day. That's a pretty good trade there going down at 69.85. I'm guessing that did you get the 69.85 down here, Larry? When we pulled back to like kind of the open of the day? Yeah, good stuff. Okay, everyone can use the chat now. Make sure if you're posting comments, go to everyone, not hosts and panelists, so we can see a chat. Yeah, nice work, man. Cool. All right. Well, I think I updated my tracker yesterday. Let me double check that here. So tracker update 1.6. Yeah, I took a screenshot. Up immediately, down to recenter by 11 a.m. for a nice winner. Started the 10 wide with an 8.9 delta. Filled and managed quick winner. So we won the day. Yes. And even though we didn't stay inside the market maker range, it didn't matter. We still made money. So certainly don't mind that. And I was also prepared for the tops. Once we had our gap up, I was looking at like that 69.70 handle. I had a bear call spread sitting there, didn't get filled, obviously. Had a broke wing butterfly, didn't get filled. So those additional defense trades with my VIX box didn't get filled, and that's okay. So today we had ADP numbers come out. A market maker move that's beyond. I would like to think that today is going to be within. So if we have a plus minus this morning, we've got about 20 minutes for the open. Let's go SPY SPX here. SPX plus minus on the day is a 22.23. So Wednesday, 22.23. Again, I mean, that's a really small move. Again, I'll probably focus on lower deltas, give the market a little bit of breathing room. All I see today is kind of positive gamma flows. So if we're above 69.20, which right now futures down 0.02, so we're talking about just a minor move. There's a pretty large transition from, let's say we open here, we have positive gamma. I mean, 69.85 is like directionally that seems gettable. Like that's by far like the largest gamma of the day. Um, but a plus minus 22. Do we have any business going up 40 points today? Not really. Not according to this, right? So let's see what the numbers look like on the deltas this morning. If I was going to be looking at puts, I'd like the puts to be below 6,900. If I'm looking at calls, I'd like them to be all the way, above 68, 69.85. So that just seems like a wide transition zone where price could be moving. It could go nowhere, but I generally do not see gamma levels out here that aren't going to attract some price. So whether it gets there and fails, or like moves this around, these disappear, and then it shifts lower. I don't know. That just seems even from an open at like 44, even getting down to the pivot, this plus or minus, it's called gamma switch in my dynamic trends. I call this the pivot point between positive, negative gamma flows at 69.20. Even that's falling 24 points. That's more than the expected move, right? So it just seems like we have some wider gamma levels today. Looking at the live feed, what's filling up this morning for 0 DTE, 60 is sticking out, and there's 85. So, you don't see a lot of negative gamma coming into this morning. Let me check my pre-market with dynamic trend. So pre-market, 85 pre-market seems to be attractive. The nice thing is like it'd be really cheap. If we get up to 75 or 80 today, it could be very, very cheap to trade what is well outside of the expected move. We could look at a nice double up trade, a butterfly, and possibly pay less than $1 to make like $9 to $14. What does the day have to do? It obviously has to go higher. Yeah, we'll see. I'm going to see when the day opens. Where are my ATRs? Because if this level here is within a 50% ATR move, then I will probably position for that with a double up trade. If my 50% is like right here, and this is more like the 100% ATR, I'm probably not going to chase that trade. Okay. But for our daily profit play, I want to see where the deltas are. I'll probably stick with a low delta again. It just seems like the market's going to be kind of best fed to the upside. That's where all the gamma is right now. ADP numbers this morning, they weren't atrocious. We have services PMI coming out at 10. We have Jolt's job openings at 10. So there's a little data coming out right around the 10 o'clock handle. We'll see what that kind of looks like when, once we cross 10 o'clock. Is news affecting intraday price action? Is it noisy? But the market didn't really flinch at non-farm. We did have a revision from -32 to -29. Forecasted 49, came in 41. Non-farm is really the bigger one that comes out on Friday morning. I think they're looking at like 60K unemployment claims tomorrow, and then Friday non-farm looking at 66,000. We'll see what unemployment rate does. We had previous at 4.6. They're forecasting 4.5. So actually looking at a tighter unemployment number. So we'll see. Okay. All right, what else is happening? Um, I do want to take a look. I've got a trade running that expires on the 16th, which is going to be not this Friday, but next Friday. MicroStrategy. Got a couple trades in here for Project Options Edge. I think it's still running. I didn't close it out yet. Ratio spread, there it is. So the 165 by 160 ratio spread. I mean, part of me wants to go after a bigger chunk of profit. This is going to pre-market up to around 163, 164. If this shoots up into some profit, I know it's a little bit early. The optimum trade is if we're greater than, this was kind of nice about this trade. If we are greater than, if we're greater than 160, but we're inside this like 160 to 165, that is bonus profit on top of my 505. So this trade potentially pays me up to $1,000. If it's at 160.01, I'm going to get a bonus of $5 plus my 505. So the break even on this trade for me is it's one, I guess, 54.05. Actually, it's lower than that. Sorry. Because if I got the assignment, I get assigned at 160. So 160 minus 5 on the trap, minus 505 on the credit. So it's down to 149.95 would be my break even. So if we're trading at 163, do I think I could flip this for a couple of bucks? Yes. Does it make me want to hang on to it until next Friday? Not really. I mean, kind of, but not really. Because if I could grab, let's say we open up at 163 today, I guess I'll just check and see what it looks like. If I had a subscription to Option Strat, this would be a little bit more precise. But I'm curious what this looks like when we open up today at 163. Technically that's inside the ratio spread profit trap, but it's just not fully materialized until we are, at the expiration point. So if this is offering a few $100, maybe I just take it to be safe. I don't want additional assignment or anything like that. So I'll kind of throw that out there for potential management for Project Options Edge. Let's see here for the week for engineered options. Let me look at. I've got a engineered options couple levels. I'm playing this week with 3 levels. We're still maintaining a good bullish posture. Let me find my workspace here. It's Project Options Edge there, Arthur. Yep. This be income edge multi-time frame. There we go. So we just, and we hit highs yesterday. RSP hit historical highs. SPX just by hit historical highs. Um, you know, is the market going to celebrate? I mean, yeah, probably. We hit all-time highs. What's not to like about that? We're postured, well above the moving averages on the 1 hour, well above the moving averages on the 4 hour, well above the moving averages on the daily. I do have a bit of a concern. We talked about this to address the year. I mean, the market can still drift higher, okay? And that drift goes to where? Maybe we do hit that 7,000 handle, but I'm just a little reluctant to just get super heavy on the bullish side because let's say we hit 7,000, this becomes a rising wedge. Okay, if this rolls over and breaks support, we're probably falling back down to 65. Now, I'd still be interested in a lot of participation at 6,500 and upwards. Okay, but I've said this before, the hardest trade in 2026, in my opinion, is going to be every week and every month. The market just doesn't really give us anything. And if you look at the VIX, it is like suppressed below 20 the entire year. It's not going to be a bad thing. It's just, daily profit play is going to feel really boring when we're getting like plus minus 20s every single day. Because we all know that a plus minus 20 could easily flare to have like a 30, 40, 50 point move on the day. So that's why we need those defense trades, So that to me is the more difficult, challenging trade. It's good for passive investing. But the argument is like, how is that justified? Or, if the market just shoots up aggressively, part of me doesn't really want to trust that because I feel like that'd be the blow off top before this thing tops out and starts to correct anyway. So there's still like a lot of wait and see on where the markets are going to go, big picture. But, with all these different strategies that we deploy, not sure where my picture went. My macro Monday, like what? I don't know. I don't know what's up with this. Weird. But all these services, like these, are win the day, positioned for the big picture swing. We're going out like 60 to 90 days on a lot of these trades for waterfall income. There's three pending orders in waterfall income right now. Today at 1 p.m., I'm hosting a masterclass. So for current members, all new members, anyone that jumped into waterfall income the last week or two when I've done some webinars, we'll do a masterclass today at 1 p.m. So 1 p.m. Eastern time, masterclass. Okay. Double up if I like what I see. I mean, we took a winner yesterday. I need to update that in the tracker. News breakers, 24-hour surges. We had a winner yesterday. Let's go here. So grabbed a quick winner yesterday. I'll update that right now. That was SPX 16. Okay. So we did SPX 16 expiration. It was an iron fly. So we sold the 69.55 call, 69.65 call, 69.55 put, and 69.45 put. No, I'm sorry. That was not. That was my defense trade. My trade yesterday was the 25s. I just did a butterfly spread, getting the defense trade mixed up. So we did a 60. It was a much easier 1-2-1. There we go. So a buy, what was the trade yesterday? Was it 15 by 25? So the 220 here, 15 by 25 by 35. That's easy. So 69, 15, 69, 25, 69, 35. Got in that for $1.60, closed for 220 credit. Okay, so about a 40% grab yesterday for another winner. Been updated. What's BF for 7,000? Butterfly. Yeah, I mean, if we hit 7,000 like by the end of this week or next week, um, I mean, a butterfly spread, it's like if you want to take partial profit on that, you can. Like that's a pretty good way to just kind of spread out over that 7,000 window. But your profit trap is going to be much closer to expiration. So I mean, flow wise right now, look at I mean, if we look at our live, like gamma right now looks pretty positive. This was interesting how this is a lot of red during that little sell off. We had a 1.75% correction during that run into New Year's. But 7,000 doesn't seem to be as attractive, but getting into like 69.60, 69.80, 85, we're really close. I mean, as long as your butterfly is maybe 15 or 20 wide, I don't know, just depends on reward to risk, honestly. So it seems gettable, but I would just make it cost effective. If you're going out a couple weeks, sure, we might hit it. But it probably be a partial profit versus pinning the trade at 7,000. Okay. All right. Waterfall income class, masterclass today, 1 p.m. Eastern time. Engineered options officially goes live on Sunday. I'm excited for that. We already have the Telegram set up. And we're looking at, pretty straightforward trades every single week. If we're looking to be really cost effective, I'll trade XSP. If you're looking to take on a bit more risk per trade, this week I did 3 levels, so I'm trading XSP. I've got 1 trade in on SPX right now for engineered options. Crash insurance, I put in the ES and SPX trade. And then Project Options Edge continues to run 61 winners out of 63 trades. Is pretty sweet. A lot of discretionary trades. We have another chunk. Let me bring over my tracker for this. So I did this over the weekend. I just took all of our trades. We still have open positions, by the way, but open positions that are still running, and I'm keeping those open. They look pretty good. We have a couple trades we might be repairing. I did take some assignment on Chipotle, so I'm repairing these with covered calls and a potential assignment on that 165, 160. If I close it out today, like I said, then we might grab of the 505 that I got filled on. So this is a 505 credit. Um, I will see if maybe the 505 credit, I can close it down for maybe a 250 debit or less. That'd be kind of nice. But this goes out to next Friday. So I don't really want the assignment, even though this would be a pretty easy one to repair for like a quick 1 week covered call. In fact, let me see just really quickly what that would look like. Let's say that I did take assignment, which means price would have to be below 160, but my break even is 149. If I took that assignment, what is like a 1 week out expiration? Let's say that we did. So this thing expires on the 16th. Let's say we went out 1 week and did something at the money. What's kind of crazy is like an at the money covered call, I could get like $7 for it. So, I mean, as long as price could stay above 149, I could probably get a $500 to $700 win and flip this thing for income within a week. So that does make it somewhat attractive. Just kind of deal with it. However, I mean, I get that, Bitcoin may fall back down to the lows. If we fall back down to the lows, that puts MicroStrategy at risk for, I mean, we're gapping up to 162, but we had lows at 150 again. So, I mean, do we come back down to 150? Possibly. I'll set a chart alarm there at the lows. So anyway, I'll keep it on this morning. Let's see here. Yeah, somebody sent me an email yesterday on waterfall income. There's no indicator. We don't have an indicator for waterfall income. All we're doing is we're trading the options chain. There's no indicator. There's no chart workspace. Like it's just the tracker. So we base every trade on, if we're doing strategy 2, it's going to be based on like percentage pullback. We structure the trade. We typically do a lot of 1-1-1-1s. We'll talk a lot about that in the masterclass. There's no indicator for waterfall income. There's an indicator for daily profit play. There's indicators in the software I use, like my gamma levels for double ups. I've got the scanner for pinch point. Engineered options, I've got a workspace I'll share. I've got an indicator I'm creating for that one, but there's no waterfall income indicator. Randy says, can't make Sunday, will be available. Yeah, it'll be available all week. You'll hear me talk about it next week as well. But if you want in Sunday, I think, let me see if the page is up already. Prosperity Pub. They haven't officially launched it yet. Let me double check. Okay, give me 1 second here. I'm just going to look at the presentation that I have prepped for Sunday and see if the page went live yet. prosperitypub.com/EGO. Yeah, I just typed that in. That didn't pop up, right? I don't think it goes live until Sunday. Anyway, I'll share this next week. So if you can't attend live on Sunday, no big deal. There's going to be replays. There'll be things you can sign up for. I'll have a live stream that I can share. We'll probably talk about it. My little segments I do in Daily Profit Plan as well. Okay. All right. So real time, we opened up pretty much flat. All the gammas pointing to the outside. So a couple things. I mentioned the 69.85, right? Way up here, 69.85. It's above the 50% ATR, which means I'm probably not going to take that butterfly spread. Although it is a very cheap trade, if we get up there, that would be 2 days in a row of market makers or the market efficiencies not responding to what we want. So after having a run yesterday where we expected 24, it went out 30, 36 points. I think today, if it's a little bit more sideways, then we probably trade inside like this 50% ATR. I think it's going to stay inside this. So if we're inside this for the day, great. Let's find out. Let's see what the numbers look like. It's a pretty quiet plus minus on the day. We're at 166, 167 on MicroStrategy. Let me check that one really quickly. So right now that 505 is up 270. Um, because it takes a profit on it right now. If I've got anybody in micro strategy with me on Project Options Edge, that 505 is trading for 250 right now. You can close this thing down for probably a 250, 260 debit, take the profit, move on. This does have potential profit trap of $1,000. Like you get the 505 plus the $5 profit trap. If we're above 160 by next Friday, there's a winner of $1,000. If it's between 160, 165, that's a profit trap. But it's offering a couple bucks right now. We're trading at 165. So I have, two choices here. One is I take the profit now and I just walk away happy with $230. Okay. Or I let it go to expiration next week and I look at, yes, I would take the assignment for less than 160. I get the assignment, but my break even is 149.05. Actually, is that right? No, it'd be 149.95. Sorry, my scribbles are nasty. It'd be 149.95, and I would just look at selling an at the money covered call, and if price can stay, there or higher for the next week, then we will, grab probably a $500 to $700 winner. Okay, so I think for right now, I'm just going to let it hang out, even though that gap is probably going to get filled. So let me take a quick peek. Let's look at MicroStrategy for a second since we're live. So we had some news. I mean, this was a 157, 158 gap. So does this fill? Probably. Let me set a chart alarm, see if we get back to 167. So let's go. MSTR doesn't look like much here, but I'm going to move this chart alarm down to this low and see if we can break like the 167 high. I'm just going to hang on to it a little bit. There was some news. It had something to do with what the heck is it? It was something with the MSCI. Let's see where it was. MSCI shelves plans to exclude crypto treasury firms from index. Okay, so it basically was like a good way. I mean, I don't know if MicroStrategy is getting kicked out of the S&P, but somehow there was big news that it's staying in is going to be garnering some inflows. Index provider scraps plans to kick out the Bitcoin holder. So that was kind of the big news where we popped up. Just let that marinate for a second. If you want to take the profit, do it. I'm not going to close it yet for the service. I'll hang on to it a little bit longer. I think I can repair it. Okay, Larry, engineered options. These are going to be weekly and monthly options for just steady income with hopefully the goal is to get one-to-one. The goal is to get one-to-one or offer a trade where I can engineer the trade in a way that if the market is going to be break even or better for the week, that we can carve out like at least a one-to-one winner. So I'm doing it for weeklies. I'm doing it for monthlies. It's going to be trading SPX and XSP. And the plan is weeklies we go Monday to Monday. So I'll give it like the full week plus the weekend. And then over the monthlies, I'm looking at just going like beginning of the month, end of the month, and maybe give myself a couple of days of a buffer. But really, it's like if the month is going to finish positive, then good. I mean, that we do have a pretty good bias that way on all of those historically. Okay. Randy, you're asking about what? Small accounts? Absolutely. Yeah. So you can trade engineered options with small accounts. If we're trading XSP especially, you can take these trades for as little as like $50. So absolutely, this I built this for standard accounts at a 250 spread or a $5 spread. You can go like 250 risk. XSP you can go as little as $50. So yeah, we can go very small on this service for sure. That was by design. Okay, let's get into our levels for today. We're trading at 6947 right now, live on SPX. Gamma levels up to 60, 69, 80, 85. It's outside of the expected move for the day. Okay. But let's see. I mean, obviously, we could have another day to the upside. I get that. Let me take a look and see what would be the plan for the day. We do have news at 10 o'clock. Let's see if we can get something pseudo attractive for the morning. So today is the 7th. Let's go into our expected move. All right, plus minus 1840, plus minus 22.2 on the day. even the low deltas don't really they're not that attractive to me, honestly. If I did like the 75, I mean, I might as well try this. If I did like the 80 85, I can try the 85. That's a really, really low delta. Maybe get a little bit of skew on this thing as long as we stay above 69.20 or 69.15. Let's see what that delta is. 69.15. This is a 18 delta. So if I'm in a position, I mean, it's almost like putting in a bit more of a skew. Like right there is trading for 70 cents. Let's see here. Do I settle for 70? That's trading for 80, 85. That's 20. Like that. I mean, it'd be a big disappointment to see the markets fall to this positive negative gamma pivot. I think we just kind of melt up a little bit. I just don't think we're getting to 80, 80, 85 today. If we do, that's 2 days in a row of inefficiency again. So, I mean, if anything, it's just maybe this week is still kind of coming off the holiday hangover, and the market's like got to tighten up a little bit for efficiency. So anyway, I think I'm going to do this one. It's going to be a slightly higher delta on the put side. That'd be a 15, and then the lower delta on the call side, and see if I can get. I mean, 85 is not awful. I'd rather have a dollar. Um, Let me see here. I'm going to do this. If I can get 85, risking 415, I'll try it. I'm going to try 85 cents. I want a buck. All right, I'm going to put in at 85. You know what? Screw it. I'm just going to go to my plan. I'm going to go a dollar. Give me a dollar. Okay, pending order at a dollar coming in for members right now. So today is the 7th. Okay, pending order for a buck. See if that gets filled. It's trading for 80 right now. If you want to get in, take less credit, go for 80. I still like the levels. It's a slightly lower delta call side and a slightly higher delta put side. I'm looking at a 16 delta put side versus a 8 delta call side, just because all of my gamma lineup is to the upside. So I want to be a bit more um, forgiving as far as like if price can drift higher, I don't want that call side to be threatened as aggressively. And obviously, if I have a higher delta on the puts, I can pull in some more premium. We'll see if price can drift a little bit higher. Okay. So based on the VIX, we're trading 1507 right now. I'm going to set a chart alarm here. Our intraday morning VIX around 6 a.m. was like 15 and change. So that's a 1519 VIX. I'll set a chart alarm to see if we're going to break those levels, but 1519, that should be just over 0.94. So 95% move would be my extreme. Let me recenter this on the close. That was a 6902 close, or 6940, what? 44? Close 6944. Yeah. So 80, 85. I'll keep it on this one. I'm going to make a modification in the entry. So 9:41 a.m. Eastern time. It's going to be 80.85 and then a 69.05 by 6,900. Okay. So I changed the legs. I changed the put legs. The 85 strike seems to get fit. 85.90. I'm just playing around with the numbers here. 85.90. All right. Sorry, I'm changing this one more time. I'm going to up the call side from 85 to 90. And then I'm going 15 and 10. All right. I didn't get filled. Arthur says too late. I'm filled. Filled at what price though? You didn't get filled at $1. What'd you take the trade at, Arthur? 85. Okay. I mean, it's fine. You're in at 85. The trade mechanically is still good. If you're using like the 10 deltas, you still have about a 90% chance of profit. It's fine. I'm modifying to a 85 by 90, 15 by 10 for a buck. It's trading for 70 cents right now. Let's calculate out some tops and bottoms. So we're looking at a 0.95% move. Let's go based on the open here. So based on the open, 0.95. So 70 10. 70 11 would be my top. That's a VIX at 15.9. Do we get there today? Probably not. But I would happily sell some premium at like the 70 10, 70 10 by 15, 70 10 by 20, looking at like a bear call spread, trying to get, if the break even is 70 11, then either one is I sell the 70 15 and the 70 20, or I do a butterfly spread up here and pin this thing at like the 10, right? If I pinned it at 10, then I've got like a $500 profit trap around 10 to 15. Lily's crossing some fresh highs, I believe. Chart alarm just went off. Okay, Larry, you got a 69.80, 69.10, 10 wide buck 30. Okay. All right. Let's see here. I mean, is it possible we get to 85 today? Yeah, it could be. I don't want it to. I mean, there's no market efficiency if we go right up to 80, 80 or 85. One thing I might look at if we do get there, let's say that we creep up here towards, 70, creep up here towards 80. I may look at a, very cheap debit spread. I found this in the later portions of the day, like 2 p.m. or even at 3 p.m. Eastern time. If you do like a 5 wide debit spread, like yesterday, I saw a trade that I think it was for 60 cents. For 60 cents, I could make $10. It would not have won yesterday because price didn't fall enough. It would have been the 45 by 40 would have been I think this trade costs like 60 cents to make $5, but I needed price to drop back below $40, right? Or 69.40. It didn't. It ended up closing at 44. So I keep an eye on this stuff because we pretty much finished at the highs yesterday, right? But if we end up getting up to some fresh highs again today and the market turns late in the day, that can be like a very nice, sometimes like 5 to 1, sometimes 9 to 1 trade late in the day. So anyway, we'll figure it out. All right, let's see what price gives us. I'm going to go up here, try to pin something around like that 70-10. So if we did buy, sell, buy, I mean, that one's got a big fat profit trap. I don't think this is going to fill. If it does, that'd be awesome, but I don't think it's going to. This one would be $1,000 profit trap. If I could get even 50 cents in this one, I'd take it. 50 cents credit. Okay, so pending order with $1,000 profit trap. Let's see if that one takes anything. So putting a DPP top. Butterfly using the 7011 top calculation with the 15.2 VIX value. Break even price on the above trade, if filled at 50 cents, is 70.20.50. Because we'd have the pin at 10. You have a profit trap that runs all the way to 20, and then you get your 50 cents credit. So that would be enough to hopefully incorporate the top and maybe get a profit trap. Yeah, it's still valid. I'm still in the daily profit play, the 69.85 by 90, 69.15 by 10, pending for $1. It's still pending. All right, and then to the bottom, let's take a look here. I mean, this is a pretty large area where it's like it's nothing. Like this is no gamma outside of, do we hit 60? Do we hit 80, 85? Or do we fall to 20? I mean, that just seems like a lot of excessive movement because our plus minus 22 on the day. I mean, if we drop right now from the open and we drop to the 20 mark, it's like that's still exceeding the expected move, right? If we get to 80, 85, that's still exceeding the expected move. So, I mean, what's kind of lame is I don't really want to see either of these gamma levels hit. I don't want to see 69.20 hit, and I don't want to see 69.85 hit. They are hit. I want to see price respect and bounce. And let's see if we can stay inside the market maker move for the day. All right. So let's just kind of keep eyes wide open and see what we have. All right. So there is that. I mean, right now I'm just going to sit and let the daily profit play just hang out. The dollar pending order is trading for about 65 cents. I'm not going to settle for that right now. Is it enough for me to chase a double up? Not really. I mean, to me, the more attractive price would be all the way up here. It should be cheap. I just don't know if we're going to get there today. So could I kind of split the difference between this 70? When you open up around 45, 70 is a 25-point move. It's like even that is exceeding the market maker move of the day. But they could be very cheap. Like if this level gets tested or this level gets tested, I feel like I could have less than 50 cents or dollar risk on each one. Let me just price it out just for fun. So looking at like the 85 pin, looking at the this is 69.20. So if we get to 69.20, if I buy, sell, buy, I mean it's a 50-cent debit for up to like $900 of profit. I mean that's not a bad trade. What does price have to do? Try to find this positive negative gamma pivot around 20. If I went 15 wide, it's going to be a bit more expensive, but a buck 20 to make, $15. Just throwing out a couple of wide nets, that's all. But there's weakness in the middle. If price goes absolutely nowhere, if price stays right in here, like this loses, and if I do another butterfly spread up here, this loses, right? So I'm just thinking if I want to play this kind of inexpensively, that one's pretty cheap, but I want to make sure like maybe the 80-85 is just as cheap if I'm going to trade both of them. Let me see. So I'll put a pin in this one for right now, 30, 20, 10, or we go 80. So if I do 70 by 80, like that, that's expensive. 10 wide is so 90 cents. So for $1.40 max risk, I have potentially that should be enough to make up some profit. If we hit like 75 or 80 today, that could be a good winner. Let's find out. Are we going to get there? I don't know, man. It seems like a bit of an ask. I mean, the gamma's there. Yes, I admit the gamma's there. But if you're in my double up service, you know this. I don't like to take trades based on gamma that's way above the 50% ATR. It just decreases my probability of profit. It's cheap. That's the good thing. So if we get there, it's a very profitable trade. But if I go pin price up here, pin price here, and price just stays within that plus minus 22, guess what? It doesn't go far enough. I lose, and I'm down 140 bucks on the day. You know, so I'm just kind of weighing the options, weighing the probabilities. It's like it's neither one is really a high probability trade. So the smarter thing is to not force it. Just kind of let price come to us. So we'll see what it looks like. I'll just sit on my hands for right now. Let's take a look at some other stuff. Okay, right now I have one participation trade in for the week on engineered options. Let me take a look at that micro strategy again. We're at 168. Minimum 300 bucks. It doesn't feel terrible versus the maintenance of taking assignment and flipping it for like $5 or $6, $7. I mean, that'd be great if it happens, but the maintenance of doing that to me is not worth it when it's like, look, we took a trade for 505, it's up 280, 290. Maybe I can squeeze what was this if I did like a 205 debit uh trade for 205 debit, see if this will fill. Okay, I'm gonna put in a debit on the MSTR for 205. I'll update this for Project Options Edge. Just got filled. Well, it's freaking easy. Okay, I'll post that since it just got filled. That was a nice little win. I've got other accounts that are running the trade, so I'll close this out as well. You take this. And then engineered here. Okay. So MSTR, I'm going to close this down, find this in Project Options Edge. I'll update the tracker. Here's Telegram, pinch. All right. Trade management, MSTR. We have a 165 by 160 ratio spread. Entry was 505 credit, closing for a 205 debit, keeping $3 of max 505 and not worrying about the 160 strike or lower for potential assignment. Okay. So part of me, it's like part of me wants to almost keep it, but it's not worth it. Like I said last year, it's like once there was a disconnect between MicroStrategy and Bitcoin as far as looking at the charts, spot price of Bitcoin does not look at all like MicroStrategy's chart. So I want out of that. I'm repairing. I'm selling calls. Any ownership I have, it's going to take the win. So let's go into trade here. Close it. 205 debit. Closing for 205. So this is good. I'm getting filled on all these trades, which is nice. Taking the winner. Closing. There is my 205 debit. Closing. Oh, even better. Let's try to get a 195. You can close it a little bit lower. Close it lower. 195 just got filled. So closing 205 debit. Even closing $2 debit or less. Take the extra profit. Trade at 170 now. This is good. So let's see if we can go $2 debit here. $2 debit got filled. $205 got filled. Yep, 205s have no problem getting filled. Try another 195. Nope. $2. Filled at $2. Oh, baby. Give me some bonus. Come on. Under $2, please. All right, $2. Come on. Filled at 2. I didn't get filled, Bill. It's a pending order. $2 filled. You talking about the daily profit play a defense trade? I didn't get filled on it. It's a pending order. This one has no micro strategy and no micro strategy. Okay, this is good. Cool. All right. So that is officially closed out for Project Options Edge. This trade, so down to a $2 debit. So 505 closed at 2. So 505 closed at 2. Made 305 in the trade out of the max profit of 505. It's not bad. 60% return on credit. I had to take the full risk, and because it is a ratio spread, it does potentially consider assignment. So there's a lot more risk, and that's why it shows a 2% winner versus like a 60% winner, because it's based on my total risk. But okay, so closed for a $3 net profit. Avoiding assignment. Okay, 10 o'clock news just came out. Yep. Yes, it did. I mean, still a little bit more, I mean, it's such a wide area for price to flow. We open up around 44. If we drop to 20, there's the expected move on the day, right? So, I mean, if anything, if I want to go for something cheap, like that little butterfly spread on a double ups could be gettable, but it's like, is the news disappointing enough at 10 o'clock to bring us down to that pivot point? I mean, maybe, or even having a butterfly where the wings can catch a little bit wider move. Let me see something here. So that's trading up to 60 cents now. Just take a look at SPX. So if we go delta neutral, I mean, this is crazy right now. My low deltas for the call side is like 70, 75 because of this intraday move right here. 05. So I go 11 delta. Hmm. $20. Do we get the 20 today? 30, 20, 10. I mean, that's a double up trade for 60 cents. Like, that's really cheap. I just don't know if we're going to get there. VIX is up a little. Yeah. So VIX spiked up slightly. 1515, that chart alarm just activated. So we'd have to go a slightly higher calculation. It's still 0.95. Unless we break above like 15.4, 15.5. Let me see if the VIX spikes up to 16 today. That would be an adjustment on my top and bottom. Okay. I'm just going to let this chill for the morning. What the numbers come in at. So ISM. So ISM services. So services PMI came in higher. I do think global PMIs are going up. Jolts came in lower, revised lower, missed expectations. Again, it's noise, man. I mean, I don't put a lot of cloud on this 10 o'clock news. If anything, like the market's going to maybe be a mover on Friday. Yeah, I just think we have a noisy day. So I'm just going to let our levels hang out, marinate. I've got the top kind of called for right now. Let me get the bottom calculated just to be safe. So if we use a VIX intraday VIX was around 15.19. So right at 0.95, 68.78. Okay. Couple levels to keep an eye on. All right, all good, Arthur. Still, man, good win. Grab an 85 out of 65. That's fine. I'm just gonna let this kind of chill for the day. Um, I'm, I'm sitting here talking myself kind of out of double ups just because this is exactly a 50% ATR. And then up here is my 50, but my bigger, cheaper levels is like 85. Look at how it's less attractive now. This was like one of the larger gamma levels in the morning. Now it's not. Now it's like we're coming back up to 60. But this like 20, I'd say 69.20 and 69.60, like those are both like gettable gamma levels today. Right? Within the plus or minus 22, I mean, we could get to 60, we could get to 20. I just wonder if the market's going to stay within that plus or minus 22 points. So I'm not going to chase, above and below. So the only issue I have today with daily profit play is, I'm trying to be safe with my levels, but I'm just not getting the premium that I want. Had I taken it this morning, I should have followed Arthur and gotten the, 80, 85 cents. But I wanted a dollar. I didn't get a dollar. But if you look at the call and option put on or call and option volume sentiment, it's pretty much a tiebreaker today, which means the market's going to be fighting in the chop zone. So it's one of those days where it's like, yeah, we might not have really any direction. Yesterday was above the market maker move. Today might be within it. If I don't get the premium, that's fine. So that 85 cents is now trading for about 45 or 50. All right. Let's see. If I pin the 20, I'm still looking at this 2025 zone. That's going to cost me about $90 risk. If I go 20, about $60 risk. That would get me, so we dropped to 30. It's not expensive. 30, 20, 10. No, not yet. Not yet. I'm debating on that right now. So this is about $70 of risk. If I did the butterfly spread, 30, 20, 10, it's a 60-cent debit. So Ironfly versus Butterfly, it's about the same risk reward profile. The difference is one's the debit that finishes for zero if I'm wrong, and I close it for a credit, or the other one is I open it for a credit. The Ironfly is I open it for a credit and I close it for a lower debit. But I guess I want to see like what 70 looks like today if we go anywhere. This trade is pretty cheap. All right, let me see if I can grab this trade for like 60 60 cents debit. So I'm looking at a double up trade right now. It's also, I mean, it's a big fall. We'd have to drop 25 points on the day. We can do it, but All right. 70 cents final offer. Come on, man. All right, fill it at 75 cents. So I'm doing a double up trade this morning. Double up, new trade. SPX 17 expiration. Buying the 69.30 put. Selling the 69.20 put. 69.10 put. Filled at 70 cents. 75-cent debit. Okay. I'm looking to see if price will slip a little bit lower. That does put a conflict in with my daily profit play, so I'm going to have to adjust the daily profit play. So because I'm doing the 69.10 as a buy, I don't want to overlap that, so I'm gonna adjust my daily profit play, which isn't filled right now, so I'll just make the adjustment. Let's see what price does for the morning. So I'm in. Double up in for 75. Let me set. Go $1.50. See if I can just double this thing. The heck, man. There we go. All right. Let's see if price will slip a little bit lower. And I'm gonna try for $100. So I'll go 175. That'll be more than 100% gain. But we'll see. Do you close? Definitely don't let it expire, Rob. This has to be managed intraday. Just don't assume that this trade is going to be perfect. A butterfly spread is about managing the winner. You got to manage the winner. So if price is going to cooperate and fall a little bit, all I need price to really do is kind of slip below this and work its way down towards that pivot level. If we're coming into this, let's say early in the morning, like in the next maybe 45 minutes, we're trading at 35 or 30, we're going to see some profit already lined up on the butterfly spread. Okay. So if it comes down to 25 or 20, great. We should see 100% gain on that trade. So my goal is to take the profit. If I'm up like $50, $75, $100, I'm going to take the profit. Right. So that is pretty cheap. If we work our way down there, we can grab a quick 50, $60, $70, $75 or better is a 100% return. So it's already up, $12, $15. Let's see if we climb up to like 50, 60, $70 here. If price will slip a little bit lower. As far as my top or bottom on the day, since I made the adjustment on daily profit play, let me look and see what my top and bottom is. So 68.80. All right. I'm going to set a kind of bottom trade in there at 68.80. So 68.78. So I'm going to go 90 by 80 by 65. See if that offers. If we get 50 cents in that trade, I like it. Credit. That'd put my break even down to 90, 80, 70, 65. No, that's not right. 70. It'd be 6869.50 would be my break even if I get filled in this trade. All right. So I'm going to keep an eye on this double up to see if I can turn it into some profit. So I'll set a chart alarm around 30. So 30 and 25, I'll set a chart alarm. 30, 25. Yep. This should be looking a little bit better for profit on the double up trade. There we go. Come on, baby. Give me like 50, 60 bucks out of this thing. Okay. So right now it's showing $1. So in at 75 is trading for like $1 right now. It's looking better. So we breached this little chop zone yesterday. It's kind of open space. So if we end up, falling, I mean, I don't know. Let's fall a little bit. Even if we follow the expected move, right? This is 44 plus or minus 22. It's like if we fall into the 25 handle, 20 handle, like that is gettable on direction for the day. So let's see what we get. All right, what else do we have going on here? Nice sort of run on some Alcoa. Excuse me. Alcoa, I have some pending orders. Chart alarm at 65, measured move at 68. So this has been one of my favorite plays for the year. I actually called this out with Lance a couple weeks ago. Alcoa is I've had this interesting like long-term relationship with Alcoa where it's like I see it as value, I see it technically driven. I bought some shares of Alcoa down here, and I was waiting to buy more at this like $10 low. So basically like a $20 position, $10 position. You can see that it's starting to run pretty aggressively. So I'm taking this as a swing opportunity and then looking at pullback levels to buy dips. Where are my levels at? I want to buy that breakout point. And even if you're zooming in on Alcoa, a measure move for me is getting back up to this high would be a nice profit target. If we go swing, pullback, swing, pullback, swing, getting to that green box, my measured move is taking this low to this high. This would be a higher low, and then measuring a symmetry move to higher highs. So I'd be really, really happy at $90 to $110 profit target. So, how do I trade that? Well, if you want to participate, small position here, another level here, and then wait for some pullbacks into these moving averages. Right? If it just keeps running higher, it's like that's a hard trade to participate in anytime that happens, which is why I would say putting a little bit in now is not a bad thing. Because usually when stocks are on the move, they're going to be like bull flag and they're going to push and pause. Right? They push, they pause, they push, they pause, and there's virtually zero pullback until it's like this. Runs straight up and then falls. Right? So that's about to happen where we're going to run and rip into like, the 80s and 90s. Having the stock go up another $20 to $30 would be great. But if we get any pullbacks, it's like, don't put everything in one level. Like this is small, level 1, get a pullback here, level 2. If it pulls back here, level 3, pulls back again, level 4, like I am going to be committed to Alcoa to try to get to like, 80, 90, $100 before I take some profit. I'd be buying the stock. I'd be buying the stock. To me, it's easier to be like dollar cost averaging and letting this thing just run. But percentage wise, I mean, if you put in, I mean, the nice thing is now that we have fractional shares, you can buy whatever dollar amount you want, right? So if I buy it now, let's say I put in, $100. Well, $100 returns $40 to $45 if we hit my profit target. If I put in $1,000, there's $400 to $450 return by just putting in $1,000, right? So I think you still have a solid like 40% upside from current price. If we have a push and a pullback, then you're probably talking like 40 to 60% to the upside. Let's see what that looks like here. If we pull back to the breakout point around 46, we get to my 90 target. I mean, that's a 90+% gain. So that's what I'm saying. I like the idea of like if I put $100 or $1,000 here and $1,000 here, and there's my break even. I'm looking at almost doubling my investment. So if it doesn't fill both levels and it just keeps running by itself from entry one, you still make about a 40+% return. But if it gives you some pullbacks and good technicals and some good efficiencies, which we did here, right? Run, pullback, run, pullback, run, pullback, run, pullback, run. It does have times where it hits those moving averages. So if it behaves in a similar fashion, you'll have opportunities to buy the dip. But my measured move and target is between 90 and my symmetry is up to one. It's technically 114, but I'd be happy at like 90 to 110, trapping some profit, moving some stop losses. Okay. One more thing on the day. I mean, I'm looking at my gamma levels. So we're, like I said, we're in this big kind of transition zone. This level, this is going to cost me 75 cents if I'm wrong. The other one I might look at is like this 60 or 70 zone. And maybe having this where if price finds one of these directions for the day, I just don't want to see price do absolutely nothing. So I want to make sure if I'm taking the trade, it's like low risk. So since we broke some support, could we just keep kind of leaking lower towards this pivot point? Sure, maybe. Let me see what like a 60 or 70 iron fly looks like. It's probably cheap. That's 50, 60 cent risk if I do a call fly. Double check this here. If I do a call fly, as long as I can incorporate that like 60 handle. So if I do 60 is gettable. 70, I might have to go like 15 wide maybe. So 75 be a sell. 60 and 85, 90. Just more risk. If I go down in strikes, that's still expensive, man. $1 for it's double the price of the put side. Come on. I'm just trying to knock out a net winner on the day. XLF breaking some lows here now. That's fine. I think XLF is by the dip though. You're talking financials? That's not really breaking lows. If anything, this is by the dip. You come back into this cluster moving averages, I'd be buying the dip in XLF. I think this move looks pretty good. Yep. So I mean, let's just do a sector shop around here. So communication services, is it by the dip? Maybe it's got some Mag 7 exposure and weighting. So I mean, the sectors I like the most this year. I don't mind energy, but energy is like buy the lowest possible level you can. This is our Liberation Day low. I've got some XLE puts. I know there were some splits in these. We did 2-for-1 splits on several sectors this year. So my puts have now been changed to like this low. XOP, That's an oil and gas play. Same thing. I'm down here towards $100. XLF is financials. I wouldn't mind doing XLF around 50 bucks. I mean, if you sold a put, that's not terrible. XLV Healthcare, I've already sold some puts on this one. This one's doing pretty well. Industrials, if we get dips and pullbacks, buy the dip. I think industrials look good for the year. I think basic materials look good for the year. Watch your moving averages. Watch for some dips. Look left on the chart. Like if I'm selling puts here on XLB, I'm selling puts at 42 bucks. Real estate, probably not going to touch that. Mortgage rates have to improve. If they improve in a big way, then maybe XRLE is good, but otherwise they'll stay out. Tech, probably my most caution is in like QQQs. I could see this year, if we have a really choppy year, I could see the S&P essentially being flat, like single digit gains. I could see the NASDAQ being zero or like plus or minus, 5 or 10%. That would be it. Look, that'd be a very disappointing year, but it would be completely within the averages of the S&P, like after just outside of 2022, 2020, I mean, even 2019, 2020, 2021, 2023, 2024, 2025, 2022. Look, that's 6 years I'm counting where the markets returned like 16 to 20% a year. 2022 was a bit of a reset year, right? Market was down for 10 months. That had a peak to trough of like 30%. So, I mean, having a sideways year or a choppy year, it's like, I could see that happening. Nobody's going to enjoy that because everyone's just chasing momentum and chasing direction. But man, it could just be like a very normal, like sideways chop year. So, I think the market just doesn't puke up gains and have like earnings compression. Then I think it's just going to be a year that if you own some stock, you sell some covered calls, you generate some income, you trade your face off and sell some puts that never get assigned. It's like there's ways to make money. It's just I think it's going to be a trader's year versus like a big 20% ripper. So, but I could be wrong. We'll see. All right. So I am kind of tapped for ideas. I'm looking at that fly that's only 75-cent risk. I'm considering putting in a couple of like tight trades in here, maybe like a 50-cent risk for a 450 reward, and stagger them in here at the center price, and maybe going after like the 60 or 70 zone. But that's just more expensive right now. So let me show you what I'm talking about here. So if we opened up around like 45, so if I do a butterfly here, if I go, I mean, I could go put fly or call fly, but if I went put fly 45, 50, 40, this should be really cheap. I mean, this trades for 50 cents, right? You've got a $5 profit trap. You go a little bit wider, it's way more expensive. So you risk $2 to make, $10. So your net would be about 800 bucks, but price has to stay in this range. So could I, surround the day and try to get a net? Yeah, I mean, I could take this trade and this gives me, maybe up to 800 bucks. This trade only cost me 75. So if I went up a little bit higher than that, I don't really want to risk more than like $1 here, right? So this is cheaper. If we pin this thing at 45, if I pin like 45 or 50, I could kind of play both of these for like another 100 bucks. See if I can get this thing for 50 cents. So it'll be a put fly in. And if I want to pin, let's go 60, 55, 50. What's significance of 55? Nothing. 50. Maybe some chop around 50 for the day. Maybe I try to pin 60. And that's 40 cents. Like that's dirt cheap. If I go a little bit wider, it's more. So I'll tighten it up a little bit. 30-cent debit. Okay, I'll let that just chill for 30 cents. All right. So I'm playing around with some levels. If we get something to kind of pin in here, I'm trying to grab a high reward, low risk trade. If we come down to this level, that double up trade should do pretty well. 75 cents. If I can turn it into $1.75 credit, I'll take the profit. Um, if we just kind of chop around in this zone, it's like I might just try to put in a couple of very inexpensive butterflies in here. So I'm going to get a little creative on the morning, but to me, this is probably a day that daily profit plate doesn't fill. I was cautious on my numbers going low delta. It's probably not going to fill. So I have my defense trade. My pending order still isn't filling. So it might just be a day that I've got to mess around with some smaller price trades. All right, let's take a look. Dividend stocks down. Yeah, let's take a look at those, Sean. GIS. Well, yeah, General Mills. I don't know. I mean, let's see where the margins are at, I guess. Maintain equal weight. I think the reason why is like we're not officially out of this bull market. SPX just filled at 50 cents. Okay, and then 60. Yeah, I'll take a look at those. Um, I mean, Pfizer, I'm in. Pfizer for years. That's like I don't know why Pfizer sucks so bad, but we're trading at 25.63. It's like a 7% dividend. I mean, it's a 6.76% dividend. I have a few thousand shares of Pfizer. I mean, the dividend alone is decent. I mean, it's better than a risk-free rate. I don't think the stock is going much lower. Um, the goal for me on Pfizer is the shares that I have. I'm looking to see if we can get back up into the 30s. I'm not looking for some crazy big run on Pfizer. What would be the game changer for Pfizer would be if they start making like weight loss medicine. They start making Ozempic or GLP-1s. They start getting into that space like Eli Lilly. Then I think that they start to turn the corner. Um, but they're such a big company. It's like, are they just living off of like Viagra and a couple other things? I mean, COVID's done. Like COVID vaccines, nobody cares about them anymore. Um, but I just think they need to get in that space. If they do, then this could be a price appreciation move in addition to the dividends. Okay, Gil, that's great, man. 90 cents, five contracts selling off 60, 50, 45. Those are great. Get those things exited out. You'd be clearing out like 30, 40, 50% profit. 3% versus dividend stock. Yeah. I mean, so like I said, Pfizer at 6.76. This is one that I would say I don't mind putting some money into it. And it doesn't look like it's a falling knife. GIS, be careful with the stock like this because it is still falling. Like there just looks like there's little to no sign of this thing turning, right? See if I can get filled. So that's trying to pin that thing at 60. Okay, so I would just go back to these stocks for Sean. GIS. I would look a little bit further left once the data pops up here. I mean, if GIS is trading down to like $36, $37, like that's a 2018 low. I mean, that's crazy, right? Like that's lower than COVID. And our COVID low was this is the COVID low around 46. We're below that. I mean, if I look left at the chart, I'd say 30, like $40 to $35 looks like a pretty strong entry. Let me check on something here. Make sure it's not just jumping into a falling knife. Dividend is 5.57. Let's look at fair market value on GIS. Gloria, yep. So options training program, absolutely. I mean, there's a few of them. But if you're looking for like options training, just like basic strategies, overviews, things like that, I have a $27 quick guide course. I have a $497 full course with 13 strategies. This is all like foundational knowledge. If you are a member of any of my services and you upgrade to lifetime membership of any of these services, then I will give you this full course included. So I throw this in as like a $500 bonus if anybody upgrades to lifetime daily profit play, lifetime waterfall income, lifetime newsbreakers, lifetime double ups, lifetime pinch point. You get this course. Okay. But if you just want to get started, trading the market bullish or bearish, that's the $27 quick guide. If you want to learn 13 strategies up, down, sideways, that includes, butterfly spreads, calendar spreads, iron condor, strangles, bullish spreads, bearish spreads, like 13 of my kind of go-to strategies. There's a full course there. So I'll post the link. If, like I said, any service you upgrade to lifetime, you'll get this included. If you just want the $497 and you're not paying $995 or $1495 for the other courses, then you can go do the full course here. So I'll post the link in the chat for you. But this is where I guide anybody that's looking for options education. I just guide them here. I built this course for what is the fastest way for me to teach somebody how to get started with trading options. Okay. Like options comes with an interesting learning curve. I try to make it as simple as possible to follow, not intimidating. The language is stupid. I hate the names of the strategies. It sound like when you talk to somebody about trading options, it makes you sound really smart, which is fine, but that's not the point. The point is, can you actually understand what you're doing with like where you take the trade, where's your break even, where's your profit, how do you make money in this trade? So when you place the call side or the put side or the debits or the credits, what matters on your chart? Where does price have to be for us to make money, right? Like the trade that I took today or the closeout today in MicroStrategy, I knew that trade needed to be, so it was a 165 by 160. So this was a buy put, and then the 160 was a sell put. Okay, I collected 505 credit. And so the summary of the trade is I need price to stay greater than 160 by expiration for full 505 profit plus potential bonus profit of $5. So max profit on the trade was 1005. Okay. If price is greater than 165 by expiration, I keep 505. If price is less than 160 by expiration, I get assigned the stock and I take 100 shares at 160, but my break-even price is 160 minus $5 minus 505, which is 149.05 or 95, sorry. So my goal, my backup plan is to quickly repair the assigned stock for 1 week covered call, which should hopefully grab us like $5 to $7 credit, right? So look, I say all this because like the trades I take, there is a plan. I either win or I lose, but this is where price has to be for me to make money. This is where price is for my risk. And I know the stuff going into every single trade. So when I take a trade and I need to manage a trade, I can just spot check and see where prices are at, right? I do this for daily profit play. Daily profit play, we don't have like really a backup plan outside of we have entries, we have defense trades, waterfall income. We build in a buffer. We have like percentages for real margin for error. Engineered options, I'm looking to participate and then trade some really key levels for the week. But it's like it can be very cost effective on a lot of these trades. So if just that is like that makes a lot of sense. I want to know exactly what my reward or risk is. I want exactly where price has to be for me to make money and take on risk. Options is a great tool to trade. So, I mean, I think getting started like a foundational course would be very helpful. That way, when I'm talking about a butterfly or a bull put spread or a blah 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 strategy, it's like I've heard Chris talk about that. I know what that is, right? And then following, the trades in an option chain is also pretty easy. Okay, all right, Sean, I'm going to go back to a couple of those trades for you, man. So GIS maybe around 35 to 40 bucks. If I look at the fair market value in this thing, let's check it out. I mean, it has strong upside. It's a 9.3 earnings, price to earnings. Fair market value is over 100 bucks. It's trading at 43 right now. It's like, I mean, I'd be happy to see this thing offer a pullback to like $37. I'm gonna put a chart alarm at 40. Okay. The one thing that it's probably not going to give us is like a ton of premium. But if I did, let's say like a 30, I'm just curious what this looks like for GIS. They have high debt. If I went out to January 2027 and I do a ratio spread in this thing, let's say that I like that kind of $37 zone, right? This low is like 36.50. So if I do, let's say a 40 by 35 or this trade, it's like this one's not a bad trade. 37.50 by 35, I pull in 84 cents. I would have a bonus trap of $250 on top of my 84 cents. I would take assignment below $35. If I look left in the chart, is the reason for General Mills to be below that? I mean, it has been. You go back to like the great financial crisis, we've been down as low as 20 bucks. So the hard part in this one is like it's going to be a challenge to repair this thing. If you take assignment below $35, you are not going to love covered call, covered call, covered call to roll yourself out of this thing and try to get some profit. So if you wanted to just buy and hold, I think putting in like a 37, allocation of $1,000, and then back here at this low allocation of $1,000, and then you see what that ultimately gives us. Because if I put 1,000 here and 1,000 here, and my break even is in the middle, and price finds its way back to all time highs at any way in any time in the next 3 years, 5 years, well, that's a lot of upside potential. Is it not? If we go here and we go up to all time highs, that is a 200% gain. Doesn't cost us a lot to do that, right? Doesn't cost us a lot. But if I had $2,000 and I could turn that into $4,000, that's not a bad trade, right? But I think that's almost an easier trade. And you're right. Plus the dividend of 5.5%. So if you get price appreciation, this is what's crazy about some of these value plays is look, and I know there's been some value traders that have been like just begging for like, I'm a value investor, I'm a value investor. And they're looking at trades like this and they're wanting this value swing to go their way. Um, you know, I don't know what the deal is with General Mills. For the most part, what they're doing here is that they've done some spin-offs, right? Like General Mills has some spin-offs, but it's like this is in the food industry for the most part, and like they make garbage food. Yes, it's cheap. Yes, it's staples, but are we in an environment right now where the market is like people are broke and people are buying, Campbell soup or the what's the bag cereal, multi meal cereal? I mean, I don't think that we're there yet. And so this whole rotation is like if the markets take a nosedive, this stock would probably not go down as far or as aggressively, but it would still be painful. I mean, even though this would look good coming out of a recession or getting into like some more defensive trades, I just don't think that the rotation is there yet where everyone's going into like low beta, high dividend yield, like defensive trades. I don't think we're there yet. Another way to look at it is going into consumer staples. So if you go to XLP, this was one of the only sectors last year that finished flat or red. And in fact, I think for the year it was actually down. So until you start to see, this ticking higher, which again, that would be a sign of big defense coming in the market. I think if we have a range trade, it's like this looks good to be buying defensive sectors low enough that it's more of like it's exactly that. It's a defensive trade. So anyway, time will tell, man. But if you like General Mills, it's probably not something you can generate a ton of premium on. So selling options seems a little bit unnecessary. But if you like the trade and you want to get the dividend, put in a couple levels. Look left on your chart. I think 37 and 25 look pretty attractive as far as like finding lows. Per discounted cash flow model, this thing has the ability to get back up to all-time highs. It's just how much you want to put into it. Because it could be dead money for a while. It's like this stock could do absolutely nothing. And all of a sudden it's like, why is it that from 09 to 2016, this thing just ripped? It was up 200%, right? And then you had a massive pullback and then you had another 150%. So if we have similar structure, I mean, yeah, we could go back up, 80, 90%. We could get back to highs at 150, but it's going to be a journey. It's going to take time. But if I'm holding it and I have limited downside price drawdown, but I still get a 5.5% kicker, I mean, again, it could be worse, right? Campbell Soup, yep, same thing. And I've done this on Kroger and Campbell Soup and Keurig Dr. Pepper. Like I've traded these over the years, and the hardest lesson is when you trade options, you just don't get the premium. Like it's harder to repair a stock like this outside of you get assigned the stock, you're at the money, you can get maybe a couple dollars for it, but that's it. That's it. So on this one, it's like if I looked left on Campbell Soup, I'd be looking at buying, 25 or $20. Look at this run, CPB, Campbell's. I mean, Snowflake looks pretty darn good. Trading way below estimated values, discounted cash flow, price to earnings. These are all like, I mean, General Mills price to earnings is cheaper. It's a 9 multiple versus 14 multiple, but fair market value is $60. I just don't think the market is fully going into defensive trades yet. So I mean, it's probably one of those scenarios where if you get this trade, you're early. If you started dollar cost averaging into Campbell Soup, you're early, right? Does it work out okay? Sure. When people are buying cream of mushroom and tomato soup because it's cheap, then yeah, this stock probably bounces back up to 40, $50. But you're getting a decent dividend. I mean, it's reliable, I believe, right? I mean, they've probably paid dividends consistently for a long time. We look at risk here. Just say dividend not well covered. Pays high reliable dividend. I mean, it's good. That's what you want to see, right? You don't want to see like questionable dividends where it's going to go from almost 6% down to 4 to 3 to not paying dividends. That sucks. Like I got stuck on Walgreens doing that. Walgreens paid like a 7% dividend. All of a sudden they just stopped. They were delisted from the S&P. So yeah, I think that if you're starting to participate in trades like this, you're early, but I like the plays. I think if you go out 3 to 5 years, it's going to have a time and a place to be good. Um, but I mean, if the market turns hard to the south, these all have vulnerabilities. The one thing that you will not see, okay, if the market takes a 20% correction, these little defensive trades are not going to go up 100%. Everything will be down, okay, but these will be down way less, and they've already been beaten up enough that it's going to be rotating out of the higher beta into the lower beta with the dividend, and it's just more of a resilient trade. Got it? So I like it. You're early. I wouldn't put a ton of capital behind it. Be patient, but I think in a couple of years, it wouldn't surprise me that these actually turn out okay. Again, dividend wise, not terrible. I just don't want to see, buying aggressively and buying big positions and watching the thing drop to $20, or I guess worse yet would be like, we're talking Campbell Soup at 10. It's like, look, at the end of the day, if you had to pay me to be a stock picker, I'd rather trade an index because I know that statistically holding stocks for 5 years, 10 years, like I know there's plenty of stories of, man, if I held Walmart since inception, I held Tesla till inception. I get it, right? If we had them at Mag 7 since the dot-com bubble and you buy these things for pennies on the dollar, you've made an absolute fortune since 2000, 2001. But the likelihood of the same 7 stocks, the same 10 stocks still being with us another 10, 20 years and still being at the top of the food chain is where the probabilities start to decrease significantly. Most of the time, being a stock picker, you will fail in the long run because they won't continue to pay long enough. There's too much like it would be it's not systemic risk, it'd be non-systemic risk, but it's like company wide, too much drama can happen, right? These things are like managed only for profit. I mean, that's the problem with publicly traded companies is all they care about is fudging the accounting to make sure their earnings look good and it keeps their prices going in. If they're in the S&P 500, there's automatic flows. So they start risking that stuff. It's like if something gets delisted from the S&P, you're losing out on billions and billions of flows every single month. It's like I don't know what those stocks are going to look like. I don't know what the top 10 are going to look like in 5 years. So I think always trading a basket and owning the haystack is a lot more consistent. Yep. All right. Consumers are leaving brands for own label while they're being squeezed. Yep. Yeah. There's a lot of ways to do it. I mean, like I said, it's not a bad plan. If I was going to go into dividends with the ones you just mentioned, like GIS and CPB and whatever else, even Pfizer, it's like, yeah, I don't mind putting like 5 or 10 grand into that. 5 or 10 grand, it's a decent dividend, not a bunch, but it's like I'd make, let's say a total of like 600 or 700 bucks on just owning the shares. Um, but I'd also want to have like a backup plan. It's like, all right, if I'm putting 10K in, I want another 5 or 10K that I could say this is also another level that I buy it at. Right. And then that dividend goes up to, you're on 20K, you're making, whatever, 1,200 bucks a year, 1,400 bucks a year, which is better than a stick in the eye. But I think that you're early to this trade. And sometimes like those are great trades. You're early, you wait it out, but like it works out, you know. And when it doesn't work out, it's like you're enjoying that you have these dividends, you got a good core position, you're buying out near these lows, and then the thing goes up from 26 to 50. And you have a value play that's actually pretty cheap that doubles in price. Plus you've had a 5 or 6% kicker the whole time. Like that's pretty amazing. Like the one stock that did that for me the last couple of years would be MO. I bought MO at 40 bucks, aggressively at 40 bucks. And I was buying it at 40 and I was going to buy it down here at 32. That was my plan. Okay. This one has like a 7% dividend, 7.5%. So I bought it at 40, level one. I had a pending order at 32, never got filled. But when this thing ran from 40 to 70, plus I had a 7.5% kicker, that was one of my most profitable trades in 2024. Had no idea that would be my most profitable trade, but it was. Right. So anyway, I mean, I like it. And it's a dirty stock. I mean, it's smoking, it's vaping, it's tobacco, but when people are stressed, they drink and smoke. Unfortunately, maybe this new generation is different. I'm reading more like college kids aren't drinking as much and blah, blah, blah. It's like, all right, whatever. That's cool. But anyway, it's probably not going anywhere. All right. Anyway, MRLV Marvel. What do we have here? This is not a dividend play. What's this? Semiconductors? Nah, I just own the haystack, man. It's way more expensive, but like an SMH, SOXX, those are to me better than individual companies. I think this AI stuff is going to be like a leapfrog of who owns what, who wins, who's getting paid, I have no idea who's going to win this AI race. So I think you could have like NVIDIA at the top of the food chain and then kicked off by Google. Then Google, the CapEx spending stuff is probably going to blow up in investors' faces at some point. Remember what happened in the dot-com bubble? We came out of the dot-com bubble with the internet, and it was the greatest thing that we've ever had technologically speaking. We've had 20 plus years of great prosperity. Yes, we had a great financial crisis with the housing markets and over leveraging banks and crap like that, but we survived it. We're at all-time highs, and we're 3x, 4x from those levels. But AI could be the same thing. AI could be completely disruptive. The market crashes in some way, shape, or form, has a massive cleansing. But what comes out of it is like another massive technical innovation. It's like I don't want to be stuck picking who's going to survive it. When what I know will survive is going to be the S&P 500 will survive, the Nasdaq will survive, the Dow will survive, the Russell will survive. So even if they face a lot of volatility and a lot of drawdown, that's an easier survival trade to me than trying to pick individual stocks. Fair? Okay. All right. I think I'll wrap it up there for today. All right. Couple more things. Just to recap for today, Waterfall Income Masterclass at 1 p.m. Eastern Time. Engineered Options, get ready. We're doing a launch on Sunday evening. Lance and I will go live. I'll be talking about it as well next week. It has its own Telegram channel. I'm finishing up the class deliverables. We'll have workspaces, indicators, member Telegram for Engineered Options. This one is not going to be a heavy like live session class. This is going to be like post a video, post some alerts, follow Telegram, and these are levels just kind of set and forget for the week. It's I want it to be very low touch. But obviously lots of communication from my end and like what I'm doing and how to manage trades. If I enter the trades on a Monday, they're good for the week. Okay. My goal is to spot check them on Friday and they'll expire on Monday. So if I take the trade on a Monday or I take the trade through the week, it's going to expire from Monday to Monday, right? The monthly options is beginning of the month, end of the month, look at some key levels, survive. But we can trade this with SPX and XSP, which is, 250 spreads, 250 spreads, 250 spreads versus 50-cent spreads. So for the smaller accounts, 50 cents doesn't set you back too much for a nice defined risk trade. What was kind of interesting is here's what I know won't happen. We're not going to lose every trade. Okay. And so if I just did XSP all year long, the most I'd be risking would be like $2,500. If I lost every single trade, which I won't, okay, we're going to win probably 65 or 75% of these trades. But if I did lose every trade, I'd lose like $2,000, $2,500. So even from the smallest account, we can risk that. But the goal is every trade we take is going to be an opportunity for a double. I'm looking for 100%. So if I'm risking 50, I want to make 50. Okay. And I'm also crafting these trades for the VIP members that we can put this in and actually have this profit actually pay us more. Okay. So I'm looking forward to this. This has been, I did a 10-year study on this thing. I ruled out that I don't want to be bearish. I traded this thing. I tested everything, trading bullish and bearish. At the end of the day, we're better served for ourselves, better timing, better entries, better sustainability, bigger profit factors, more money, way more capital efficiency. Just stay in when the market is bullish, right? This year, I think if the market just drifts and drifts and drifts, has a correction, finds its way up, we're going to have plenty of time to participate this year. And we'll have lots of doubling opportunities. Okay. If the market turns the corner and goes south, we're not going to be forcing trades and participating. That's why I have this workspace, right? So if all of a sudden things are crossing over, we don't have to participate. That's good enough to say, all right, caution, don't trade it yet, right? Because if we break through this level and then we're testing this level, it's like, I want to see if it bounces. But if it's breaking here and it bounces, great. The sustainability is we keep this thing going. But if we start seeing about a bunch of indecision, it's just not worth forcing the trades. So here's the difference. If you go from a win rate of about 62% trading the markets up and down versus a win rate of like 74% or 77%, I'd rather take the higher win percentage on top of a risk reward that is 1-to-1. Okay. So, because think about this. If it's 1-to-1, we do the math. If I traded 100 trades and I win 51% of them, I'm still making money, right? I still make money. Not a lot of money, but I still have like that break even. So when you're making 1-to-1 and your win rate is 70% or 74% or 75%, you make a lot of money. I've talked about that grid for a while where if you think about who you are as a trader, okay, low risk, high reward versus win percentage. If we have, decent reward to risk, it'd be here. If we have decent reward to risk of 1-to-1 and our win percentage is high, so high win percent, and then a reward to risk that's also favorable. And I say this because it's so easy to trade options with a less than stellar reward to risk. We do it every day in daily profit play, right? I'm risking 4 to make 1. I'm risking 850 to make 150. Like that's backwards. Like a loss stings. I have to make it up with 5, 6, 7 winners in a row. If I trade engineered options, I lose 1 week and I win the next week, I'm break even, right? And we have multiple levels where if I lose 1 trade, win 1 trade, I'm break even. If I, break even on 1 trade, win 1 trade, I make money. If I win on 1 trade, win on 1 trade, I make lots of money. And it just keeps the equity curve as tight and as smooth as possible while also trading, I'm giving myself like 2 stars per allotment, right? So this is a 1 hour, 4 hour, and daily. So if these ever go yellow or red, it's because I'm showing some caution on those time frames. So the 1 hour chart, the 4 hour chart, and the daily chart, it's really nice. It's at a glance. I'm going to share that workspace with you for the class, and we will decide. Look, if the 1 hour chart is caution, we don't have to trade, but if the 4 hour and daily is still bullish, these are strong enough where it's like, okay, look, I've got 4 out of 6 stars being bullish. I can still participate in an up market, right? Because what does the 1 hour do? The 1 hour pulls back, and then crosses over, and it goes back bullish, and we get, our 4 out of 6 stars turns into 6 again, but we have to have the courage to participate at a dip, right? But I will make this like as visually friendly, as easy to follow as possible. Trade setups are really straightforward. You're doing like basic spread trading, and good reward to risk, high win percentage. We're just trying to stay in the right environment. Okay. Cool. All right. Let's see here. Fusion energy that came out the last 24, 40 hours from Trump. Yeah, I don't know. Did he speak yesterday? I'm just curious what's going to become of oil in Venezuela. We talked about that. I talked about this in a session this morning. I mean, oil is vulnerable, in my opinion. Oil is vulnerable. If Venezuela comes online with more production, we increase to what we saw back in like the late 90s. I mean, Venezuela was producing up to like 3 million barrels a day. It is a supply glut. If they start bringing all that stuff back online, that will drive prices lower. I do think that technically, if we break this support at around $55, that oil can slide to low 40s. One thing that could be a bit of a surprise move is if oil is dropping, we have deflationary pressures, right? We are going to see inflation going lower, giving the Fed more room to cut. Yes, there's going to be supply and demand issues. I would be long oil. Do I think oil is going to negative ever again? Probably not. It was crazy that it happened. It did happen. It was a mispricing. Long oil during COVID was a ridiculously good trade. But if we just technically go high, low, lower, high, lower, low, I think oil prices bottom out between like 40 and $30. I want to be long oil, long energy, and then take it back up. But if we're talking about this inflation story in 2026, if oil is pushing lower, that allows the Fed to still have room to cut like they've been talking about. Okay, but the problem is the cheaper it gets, more stuff goes online, more stuff goes offline. We're trying to tell people start up more, drill baby drill. It's like they don't want to. Nobody wants to drill at terrible margins. So they just keep things like paused, right? But I don't know. There's just so much supply and demand manipulation with oil. It's like I just see this technically as if we get down to the 40s, I'm buying oil. If we go down this year, it's like then the gas at the pump helps, deflationary pressures help, the Fed can cut. Like this can be all like a tailwind for stocks. So this is why there's still like a pretty legitimate like bull picture for the stock market. Energy prices haven't really broken the bank yet. Electricity prices are going up. States are pushing back. We don't know this crap until probably later this year, right? Because what's going to be the big fight in 2026 for the midterms? If people are pissed about electricity costs going up and basic utilities going up, that's what the left is going to fight for, right? I mean, New York voted for, essentially like a socialist policies. So does the country vote on that in the fall? I don't know. So I think there's certain policy risk that we have to kind of navigate later this year. And then 2028, Lance and I talked about this yesterday. He was talking about AOC running for president with a ticket of like Bernie and AOC or whoever. I'm like, oh God, I'm so depressed just thinking about what our 2028 options are going to look like. It's going to be probably Vance on the ticket with somebody else. But I just politics, they suck so bad in the US. I'm sure every country says it, but it's like we have had just a circus the last decade. Um, I mean, we're supporting 2 wars right now, right? We go and invade Venezuela. We've had Russia, Ukraine going on since COVID. Obviously, there's the threat of China, Taiwan, maybe, but whatever, man. It's just like the world goes on. Focus on what you can control. Like I don't lose sleep over this stuff. It's just, can I trade it? It's something I can trade benefit from. All right, so off we go. Okay, I'll let you go for today. Come back and see me at 1 o'clock for Waterfall Income. I'll have a live class, 1 o'clock Eastern time, and we'll chat some more. We'll do a combo like strategy 1, strategy 2. I'm also doing a closing playbook today for Build a Trade at 3:30. So I'll be live for a couple more sessions today, and we'll see how the rest of the day unfolds. It doesn't look like Daily Profit is going to get filled based on my levels and based on my credits, and that's fine. I mean, we have those days where just it doesn't really give us a direction. The best I could have gotten this morning is probably like that 80 to 85 cents on the initial trades that I took. I didn't settle for 85 cents. So now I have a couple of butterfly spreads, and I'm trying to figure out if those are going to pay me. So, all right, I'll let you go. See you at 1 o'clock for waterfall and 3:30 for closing playbook. All right, bye.
All right, folks, have yourself a wonderful day. Um, that's all I've got.